Hi class, we're going to be looking at chapter 20, problem 2b. Okay, you should be able to see problem 20-2b in Cengage. What we're going to be doing today is we're going to be preparing a cost of production report. So if you'll hold on just a second till I get myself straight here. This cost of production report is a report that each department in a company that uses process cost accounting system would be preparing. And what it does is it shows you what has gone on in the work in process account for that department. And so as we talked about in the last video, you will remember that we said in a process cost accounting system, each department that you have in your company will have its own work in process account as well as its own factory overhead account. So there can be multiple work in process accounts and factory overhead accounts in a company. For this company, we're going to be the Bavarian Chocolate Company, and we're going to process chocolate into candy bars. And the process begins by placing direct materials like raw chocolate, milk, and sugar into the blending department. All the materials are placed into production at the beginning of the blending process. Now, this is something that's really important for you to note here. In this textbook, we only talk to you about placing our materials into process at the beginning of the process. In other textbooks, you will learn that you can put materials in at the beginning of the process, at the end of the process, or all throughout the process. But to keep things simple, we're always going to be using our materials at the beginning of the process. So we're going to place them into production at the beginning of the process. And so that's something that's very important to note when you're doing a cost of production report for a particular department. After blending, the milk chocolate is then transferred to the molding department, where the milk chocolate is formed into candy bars. And the following is a partial work in process account in the blending department at October 31st. So this is the end of October, and all of this information we've already recorded in our ledger account for the work in process account. They have left off some of the information for you, but technically in the real world, you'd be given all this information and then you prepare your cost of production report. They just want you to do some thinking on this particular problem. And this is a ledger account for work in process. Remember, work in process is an asset account. So any balance that's brought forward would be coming from the previous accounting period. In this problem, the previous accounting period is the month of September. So we brought forth some items from September. What we do know is that the number of units that we're working on from September that we're transferring into October is 2,300 units. And we also are given the information that these units are 3/5 completed. And what that means is they were 3/5 completed last month with respect to conversion cost, because all of our materials are in these 2,300 units. This part right here is just telling us what has not happened with respect to conversion. We have not completed these units from last month. We're finishing them this month, and we have to finish them with conversion cost because all the materials have been added last month. So the amount of our cost that we transferred in from last month to the beginning inventory of this month, this amount right here would include materials, labor, and overhead from last month, where we started this 2,300 units, but we did not finish them last period. So we had to bring what we were working on last period forward into this period so that they can be finished. But the cost of the beginning inventory is $46,368. During this month, we've added some more materials to process. So we've added some more chocolate, some milk, and some sugar into the process for the blending department. And the amount that we have added in materials cost us $429,000. We also brought in 26,000 units of materials that we're working with during this period of time. So what we have is our beginning inventory cost from last period, plus we're adding the cost that we incurred during this month, which is October. We had materials costs that we incurred of $429,000. So when you add your beginning inventory plus your materials, your balance in the work in process account after you've added your materials for this month is $475,368. You also have some labor, some direct labor that has been added during this month, or you've had some people that are working on the units to finish the beginning inventory units and to at least work on the 26,000 units that you started during this period of time. They're actually working to convert those units in this process. So we had some labor that we added to it. We also have some factory overhead that was applied during the month of October of $48,480. And this factory overhead was applied, that's the estimated amount that we think that work in process has incurred during this October period of time. So materials, labor, and overhead. Materials would add to the previous balance. The labor adds to the previous balance. The applied factory overhead adds to the previous balance. So right now we know that in the work in process account, we have $408 in total cost for the beginning inventory units that were brought forward and what we have started working on in this period of time. They have also given us some information that is important to us. They've given us the units that we have transferred out of the work in process account. So what we've done is we have finished this amount of units. What we will do is we will finish the beginning inventory units first, and then part of these units are finished. which is going to leave us with some ending inventory that they're going to want us to calculate. The goods transferred again are your finished units for the month of October. So what they did not give us was the cost of those finished units. We're going to find this in this cost of production report. And then when we know what we have transferred out, it will tell us what we have left over in ending inventory for our materials. So we'll end up with knowing the cost of the ending inventory as well as the units that are left in ending inventory. But what they did tell us about ending inventory is that it was 1/5 completed this month. And so those are important things that we need to know, and this is the given information that they gave to us. So what we want to do now is we want to prepare a cost of production report. This would be prepared at the end of the month, and it would be prepared for each department in the company. We're just working on the blending department's cost of production report, but there would also be one for the molding department that someone else would have to prepare. When we start a cost of production report, we start with unit information. So the cost of production report is divided into two separate parts. There's a part for unit information and there's a part for cost information that's coming. We want to start with the unit information first and complete it first. So what they're wanting here is your beginning inventory units that you are started with during October. These units came from September that were brought forward. And you'll remember right here, we had 2,300 units that were in beginning inventory. So 2,300 units goes here. What they also want you to do is determine how many units you received from the material storeroom, or it could be a previous department. If we were like the molding department, we could have received some materials from the production, from the blending department. But in this case, we're the first department that's preparing a cost of production report. So we're bringing the materials from the material storeroom into production. So right here, where it tells you that you had direct materials of 26,000 units that you brought into production. Now, what you're going to want to do is you're going to want to combine your beginning inventory units with the materials that you've received to get the total units that you need to account for the blending department. So 2,300 units was beginning inventory. We're going to add to that 26,000 units. And the total units that we have to account for is 28,300. So the first part of the unit information is about what we call whole units. And what we know is that we had 2,300 units that were transferred in from beginning inventory and 26,000 units that we started working on during the month of October. The two of these combined are the total units accounted for by the blending department. Now, in the second part of the unit information, We really are reconciling what you put down here. And so we're going to reconcile this based on what we call whole units. And if I were a student, what I would start with is my whole units first and complete all of those. And then we'll talk about equivalent units for direct materials and conversion. So start with this first column here and complete this first. What they're asking you for is the inventory in process at the beginning of October. Well, we know from this information from our ledger account that we had 2,300 whole units that came from our beginning inventory. What we don't know right now is the units that we've started and completed. But we do know the units that were transferred out of the blending department to the molding department. They told us that we transferred out of the blending department 25,700. So if you put 25,700 in here, this is some information that you are given. So put your given information in first. This is just a suggestion as to how you can figure out the information that is in the blanks that are not given. We're going to work backwards at it, in other words. Another piece of information that we've been given is that we know the total units that are accounted for by the blending department. That was the beginning inventory units plus what we received in from our materials. The total units that we have to account for this company is also going to be the total units that we assign cost to. So I'm just bringing this down here and plugging it in. Now, in order to find what we've started and completed, if we know the total amount that we transferred out, which was 25,700 units, and if we know what we had in beginning inventory, then the difference between these are what we started in October and the units that we have completed in October. So watch what I do here. I'm going to take the units that I transferred, which was 25,700, and I'm going to subtract from that my beginning inventory units. And what that's going to tell me is what I have started and completed. So 23,400 units I have started and completed. Again, I had to find my started and completed units. And what we're doing is what we know that we took out of the work in process at the end of the period, what we transferred out, what we finished during this period of time was 25,700. Out of the 25,700 units that we finished this period, 2,300 of them came from last period. So what's left is what we actually started and finished during this period of time. So 25,700 minus 2,300 gives you 23,400 units that we started and we completed during this period of time. If we know the units that we transferred out of the work in process, and we know the total units to be assigned cost, which are the total units that we've accounted for for this period of time, the difference between these two will give you the ending inventory units. So if I take 28,300 units, my total units that I had to account for, 28,300 units. If I subtract out what I transferred of 25,700 units, that's going to leave me with, I won't leave you with that. So let me try this again. 28,300 units minus 25,700 units will leave you with 2,600 units that are in ending inventory. So right here where they got this question mark, you should fill in that this is 2,600 units that we have in ending inventory. Again, I got that by taking my total units that I have to assign cost to, and that was the total units that I've accounted for, minus what we transferred out, will leave me with what I have left over in ending inventory that I did not finish during this period of time. So it might be a good idea to check your work just to make sure you've got everything written in here correctly, because if you don't, it's going to affect the rest of this. So check your work at this point in time. And you can see we're okay to this point. And then we're going to move on to something that we call equivalent units. So you need to know what equivalent units are. The equivalent units is the portion of the whole units that could have been completed during this period of time. It's the portion of whole units that could be finished during this period of time. That's what we mean by equivalent units. Notice our equivalent units is broken down into a direct materials column and a conversion column. It's important that you remember your conversion costs that we learned about in chapter 18 are your direct labor and your factory overhead accounts. So if you remember, your total manufacturing costs are your materials, your direct labor, and your factory overhead. Conversion costs are just combined by taking the total amount of our direct labor and adding our factory overhead to that. So they split these between direct materials and conversion cost. Conversion cost, again, are your direct materials and your factory overhead combined. I'm going to start with my direct materials equivalent units. And what we want to put in here is the portion of direct materials units that we started this period. Now, what I've got written down here as whole units is my beginning inventory units that came from the last period of time. Since my whole units were already accounted for in materials from last month, because our directions told us that all the materials were placed into process at the beginning of the period. That means out of all the materials that were in beginning inventory, none of them came in during October. So your direct materials for your beginning inventory is going to be 0 in October because all the materials were added last month in September. There would be none that are brought forward in this month. What we started and completed with respect to materials is going to be what we started during this month and what we finished during this month, which is 23,400. So in other words, we put all the materials in. Remember, we're putting the materials in at the beginning of the process. So if we started these units, they have all of the materials in there. In other words, they have 100% of the materials have been added to the started and completed units for this month. So if we combine our beginning inventory units with our started and completed units, what we transferred are 23,400 of materials during October. Since we have started 23,400 and finished 23,400, we actually started 26,000 units, but we finished 23,400 during this period of time. So we have left over 2,600 units in ending inventory. In other words, our total units that we had to account for to be assigned cost minus what we transferred out left us with ending inventory units. Ending inventory units have all their materials in them. So 100% of the materials are going into your ending inventory. If your ending inventory is 2,600 units, all 100% of these have materials in them. So we have the materials in our ending inventory. So what we're left with is combining the materials that we transferred plus what we have in ending inventory will give us the total amount of our equivalent units for materials. So materials, the portion of units that we've completed with respect to materials is 26,000 units. That's our equivalent units for our materials. And it might be a good idea for you to check your work once you're through with this column to make sure you've got everything calculated right. Now we're going to move to conversion cost. Notice it's under equivalent units. So this is going to be, we're calculating our conversion equivalent units. The portion of the units that we could have finished during this period of time with respect to conversion. We're starting with our beginning inventory units. Now, what you have to remember about beginning inventory is that part of the beginning inventory units were started, but they were not finished with respect to conversion. Remember, we said that 3/5 of the 2,300 units were not finished with respect to conversion. So what you have to do is you have to determine the equivalent units of beginning inventory for conversion units. And that is found by taking the total beginning inventory units of 2,300 and multiplying this by the complement of what was completed last period. So if you completed 3/5 in September, the remaining 2/5 of these units have not been finished with respect to conversion. So 2,300 would be multiplied by 2 and divided by 5 to get the number of units that is the equivalent units for conversion, that is the part of our beginning inventory that we need to finish with respect to conversion this month. So again, I took 2,300 and I multiplied it by the complement of this. What they're saying here was 3/5 of these units were completed with respect to conversion last period. We finished on 3/5 last period. So this period, we have to complete the remaining 2/5 with respect to conversion. So again, 2,300 times 2/5 is 920. That's how I got that. And that's the answer for the conversion equivalent units for beginning inventory. 2/5 of those units need to be finished during this period of time. Once we get those 2/5 completed with respect to conversion, they all become finished units that will be transferred out of the work in process account. Now, to find the equivalent units conversion of the units that we have started and finished, if we started these units and we finished these units during this period of time, they all are finished with respect to conversion. So all 23,400 units have their conversion cost assigned to it. In other words, 100% of conversion is finished because we started and finished these units during this period. So 100% of 23,400 whole units is 23,400. We finished these units with respect to materials, and we finished them with respect to conversion. So all of the units that we started and completed have all their cost associated with them in this month. So we will combine the two of these together to get the total amount of the conversion equivalent units that will be transferred out of this department. So 900, I don't know why this keeps doing that. 920 units, we'll try it a different way, plus 23,400 units that I got here. These two combined together equals 24,320 units. for our ending inventory units that we have finished with respect to conversion. We've only finished 1/5 of those this month. Remember, we've started our ending inventory units. We've got all of our ending inventory units accounted for with respect to materials, but this 1/5 complete is with respect to conversion cost. We only have 1/5 complete during this period of time for conversion cost of our ending inventory units. So we're going to take our ending inventory units, that was 2,600 units. We're going to multiply that by 1/5, and that will give you 520 units that are in ending inventory. We're going to combine that 520 units with the 24,320 that we transferred out, and that will give us, not that amount, 24,320 plus 520. I'm adding these two together here, equals 24,840 units. I'm going to check my work just to make sure that we've got everything in there that we should have had in there. Make sure that these are right before you move forward with your second part of your cost of production report, which has to do with the dollar amount or the cost that we're going to be calculating. So starting with the cost per equivalent unit, what they want us to put in is the total cost for October in the blending department. So the total cost for October of your direct materials in your blending department was given right here. The direct materials that we added during this period of time was $429,000. $429,000 is right here. This is a given amount. The cost for your materials that were added during this month are $429,000. I'm going to pick up my total equivalent units for my direct materials. Notice that your total equivalent units, that was what we found earlier, is 26,000 units. To find the cost per equivalent unit, I'm going to divide 26,000 units into my $429,000 cost of my materials for this period of time. So I'm going to take 429,000 and I'm going to divide that by 26,000 units. And that will give me, let me try this one more time, $429,000. I'm getting that from here. I'm going to divide that by 26,000 units, and that will give me $16.50. That is the cost per equivalent unit for materials. Again, it's 26,000 divided into 429,000. That gives you $16.50 as the cost per equivalent unit for materials. For my conversion cost, which you have to remember that conversion costs are your direct labor cost plus your factory overhead. So my direct labor cost was 100,560. I'm going to add to that my factory overhead cost of 48,480. Your total conversion cost are 197,520. We're going to divide the total cost of conversion by the conversion equivalent units that we found from up above, 24,840. And when you divide that conversion cost by 24,840, it's going to give you not that amount. Let's try this again. 197,520 divided by 24,840. That will give you $7.95. Now I'm going to check my work because you have to have this right before you do the next part of this cost of production report. All right, and it didn't like what I put down here. So let's recalculate this again. Our conversion cost is going to be our direct labor and our factory overhead for this period of time. Let me try this again. Our conversion costs are your direct labor, 100,560 plus 48,480. And that will give you $149,040. And I'm going to check my work here to make sure that I have added right this time. Okay. Now, this is your conversion cost. It's got to be divided by the equivalent units of 24,840. And that will give you $6. So $6 is our conversion cost per unit. Make sure you check your work because this has got to be right before you move on to the next part. So once we have determined our cost per equivalent unit for our materials and our conversion, we can finish assigning the cost to our beginning inventory. What we're going to start with is the given amount of cost that was brought forward into this period, which was the given amount of $46,368. So $46,368 is your beginning inventory cost that was brought forward. $46,368. That came from there. Now, I'm going to finish this beginning inventory. Remember, we had it all finished except with respect to our conversion for this period of time. Oh, I'm sorry, class. I'm getting jumped ahead just a little bit. That is our beginning inventory balance. What they're asking for here is all the costs that we incurred in October. Those were given amounts of costs that we have incurred in October. We incurred materials, labor, and overhead. You've got to combine all of these together to get the total costs that were incurred during the month of October. So we put some materials into process. We had some labor and some factory overhead that was applied to this. So $429,000 is your direct materials. You're going to add to this $100,560 in direct labor. We're going to add to this $48,480 to get a total amount of $578,040. And I'm going to check my work just to make sure that I've added those correctly, and I have. So the materials, labor, and overhead were combined. They were given amounts to determine the costs that were incurred in October. To these costs, we have to have the beginning inventory that was transferred in from last month, and that will give you the total cost for October. The total cost that we are going to have to account for in the blending department are the beginning inventory unit cost plus all the costs that were added during this period of time. $46,368 would be combined with the $578,040 to get $624,408. And again, check your work, and the math is correct there. In the next portion of the cost of production report, we're going to do a breakdown of these costs to further analyze what they are made up of. Notice there's going to be a column for our materials and a column for our conversion. The cost allocated to completed and partially completed units are going to be as follows. We're going to start with the beginning inventory balance. The beginning inventory was given to us, and it's the amount right here at $46,368. That is a given amount, and that's just plugged in right here. And it comes from this amount right here. So that beginning balance is this amount. What we have to determine is what the remaining costs are that we are completing of those 2,300 that were 3/5 complete last month. We've got to get the conversion cost calculated for this month. Notice there is a blank here for the conversion cost. They want you to calculate that to complete the beginning inventory. And this is how we do this. Remember, in our equivalent units, in our beginning inventory, we said that 920 units were conversion units that we did not finish last period that need to be finished this period. There were 920 units. I'm going to start with the 920 units. 920 units. I'm going to multiply the 920 units by the conversion cost per unit that we figured out for this month. And that's going to give you the conversion cost that we needed to finish our beginning inventory units. It's 5,520. Again, I got this by taking the beginning inventory conversion equivalent units and multiply this by the conversion cost per unit of $6, and that will give you 55.20. Since we had added all of our materials previously, there was none that needed to be added during this period of time to finish our beginning inventory units. That's why there wasn't a blank here. All of our materials were already added last month. So the only thing we had to do to finish the beginning inventory units was to determine the cost of conversion that we needed to complete during this period of time, which is 5,520. So the total cost to complete the beginning inventory would be the total of these two added together. So 5,520 plus 46,368 will give you 51,888. And it's a good idea to check your work at this point. You don't want to go any further if you've got something wrong here. So the total cost of my beginning inventory was 51,888. 46,368, that came from last month. This month, it cost us this amount to finish those beginning inventory units. The next part is to determine the cost of your started and completed units. Notice this time we have a blank for direct materials. we need to first determine the cost of the started and completed units with respect to materials this month. So what I'm going to do is, if you look at your equivalent units, your materials, your started and completed units was 23,400. I'm going to take 23,400 and I'm going to multiply this by the direct materials conversion cost per unit. Remember, we're finding direct materials first. Direct materials is going to be put in first here. So 23,400 times 1650 equals $386,100. I'm going to check my work, and the math is correct. And again, this is the materials for started and completed. The materials cost is $386,100. I got that by taking my equivalent units for my started and completed units, 23,400, and I multiplied that by 1650, and that gave me this amount. I then have to find my conversion cost for my started and completed units. I'm going to take my started and completed conversion units, which is 23,400 again, and I'm going to multiply that by my conversion cost per unit, which is $6. So 23,400 equivalent units of conversion of started and completed times $6 equals 140,400 of my conversion cost for my started and completed units. Again, I would check my work just to make sure your math is correct here. Then I'm going to add my materials and my conversion cost together to get the total cost of my started and completed units. And that's going to give me 526,500. What I transferred in total cost to the molding department are the total cost of my beginning inventory units plus what I started and completed. Try that again, 51,888. And that gives you 578,388. And the last thing that we need to do is we need to determine our ending inventory cost. So I'm going to fill in for my direct materials cost of my ending inventory. And I've got to refer back to my materials for ending inventory. The units was 2,600 units times 1,650. So 2,600 units in ending inventory. All of those have materials. All of those units have materials in them. So I'm going to multiply that by 1,650, the cost per equivalent unit. And that will give you 42,900 of materials cost for the ending inventory. Next, I would need to determine my conversion cost for my ending inventory. Remember that you're doing this based on equivalent units. Your equivalent units for your ending inventory for conversion is 520 units. So 520 units times $6 gives you the ending inventory cost in this period for conversion. The materials plus the conversion cost will give you the total ending inventory cost. So your total ending inventory is 46,020. To finish the cost of production report, we would add our ending inventory cost to our cost that we transferred out of the blending department, and that will tell us what we have to account for. So I'm going to add 578,388 to get 624,408. I want you to notice something. The ending amount here, notice it balances back up to this. So what we've done is we've taken these costs and broken them down to see what happened during this month. Remember, your units were reconciled with the equivalent units here. So this has to equal this. There's some systems of checks and balances here. And this is just showing you a breakdown of the costs that are in the work in process for the blending department. Another thing that I think is important is these transferred costs right here. That 578,388 is what would be entered into the credit right here that they've got a question mark for. The total cost of the goods transferred goes in here. And when you subtract that credit from this previous balance, it will leave you with the ending balance in your ending inventory, which was $46,020. So a cost of production report is just a breakdown of the work in process account for the month. Each department has its own separate cost of production report that will be prepared by management. What management uses these reports for is to control cost. What they will do is they will compare cost from last period with this period to see what happened to the cost, whether they increased or decreased. In this problem, there is a second part to this, which is what they're trying to get you to understand about management and what they use this cost of production report for. But what they're wanting you to do is to try to figure out whether there was an increase or a decrease in the cost per equivalent unit for direct materials and conversion cost. So what I've done is I've copied this information to an Excel spreadsheet that I want to talk to you about here. So for just a second, I'm going to stop sharing this screen with you. And I'm going to go to a new share. And I want to show you the Excel spreadsheet that I've prepared for the second part of this problem. And you should be able to see that Excel spreadsheet now. In part 2, it says, assuming that the October 1st work in process inventory account includes direct materials of $38,295. Determine the increase or decrease in the cost per equivalent unit for direct materials and conversion between September and October. And it says, if required, round your answers to 2 decimal places. So this is how I went about solving this. On October 1st, we had some beginning inventory cost. And that cost is coming from last month's ending inventory cost. It's just brought forward. This was a given amount. And if you look back at that cost of production report, you can see it there. If you look back at your given information, you can see that the beginning inventory cost was $46,368. Now, that came from last month. So really, this was last month's costs that were brought forward. The direct materials cost on September 30th, they told us was $38,295. This too was given. So if you know what your direct materials cost was, and you know what your total cost of your beginning inventory is, the difference between these is your conversion cost. Remember, conversion was your direct labor and your factory overhead. So materials and conversion added together are the total of your beginning inventory cost. So if I wanted to find out what my conversion costs were last month, I would subtract my materials from my total beginning inventory cost, and that would give me my conversion cost from last month, which was September 30th. Then I started over again with the units. The beginning inventory units was given. Remember, in the given information, we emphasized this a while ago, that all of the materials are added at the beginning of the process. So all of the materials are in there in the beginning inventory costs that were brought forward. The direct materials units are 100% of the total units. So in other words, all of my materials were added last period, and if the ending inventory for last period was 2,300 units, then 100% of those 2,300 units are my materials units. Then what I'm going to find is my direct materials cost per unit last month. And that would be equal to my direct materials cost for the last month. That was the given amount of $38,295 divided by the direct materials units that were in ending inventory last period that were brought forward to the beginning of this period, which is 2,300 units. So in other words, 38,295 is divided by 2,300 units of direct materials to get the direct materials cost per unit last period. And that was $16.65. You're going to pick up the direct materials cost per unit this month, which is from the cost of production report. The amount that we determined on that cost of production report was $16.50. You're going to compare the direct materials cost last month with direct materials cost this month to see what happened. Last month it was $16.65. This month it is $16.50. There has been a 15-cent decrease in the cost of materials from last month to this month. And so management would want to investigate this decrease to see why that happened. It will help them to direct operations in the future if they know about what's going on with their materials cost from one unit, from one period to the next period. The second part of this wanted us to calculate the conversion cost for last month. So again, the beginning inventory units of 2,300 was given to us. Remember, in our instructions, they told us that 3/5 of the beginning inventory units were completed last month with respect to conversion cost. If you multiply 2,300 times 3/5, that will give you 1,380. So this 1,380 is 2,300 times 3/5 is 1,380. That's the number of units that you have last month with respect to conversion. Then you're going to take your conversion cost and divide it by the units of conversion to give you the conversion cost per unit last month. So what I did is I took the conversion cost that we found, that was $8,073, and we divide that by 1,380 units. That gives you $5.85 was the conversion cost per unit last month. We're going to compare that with what happened this month. $6 was taken from the cost of production report for this month. It increased by 15 cents over last month. Last month it was $5.85. This month it's $6. So our conversion cost increased by 15 cents. Management would want to know that to be aware of the cost of last month and how they have increased to this month. They might want to try to find ways to decrease the conversion cost next month. And so that's all that I want to talk to you about today. We'll do another problem next time. Bye-bye.